Hello everyone, this is your host Vaibhav. In today's session of Daily Stock, we are going to look at the earnings of the Cisco, which is a network related products and services provider. It has a presence in various verticals related to the software related solutions, as well as it has some presence on the hardware side where it invests and develops the capabilities for network providers. And if you go through its homepage, you will get a good idea of its presence in different segments which revolve around the internet offerings. It has also recently acquired a new company, Splunk, and it has listed these collaboration for cybersecurity with the Marriott, and there is also one highlight where it has listed its collaboration with the Real Madrid. All right, our main focus is, of course, going on the earnings side. We see how the company is operating in the areas where it has a strong presence and whether it is able to grow its revenues or if there is shrinkage on the profitability side. So we will be considering its recent performance to figure out how things are shaping up for the Cisco. If you go through its second quarter's earnings report for the 2024, you will see that the total revenues, the net revenues are down by 6 percentage point for the second quarter of fiscal year 2024, and as a result of that, the EPS is down 3 percentage point year on year. And this decline is mainly coming from the product side, where it has seen sharper decline. But its recent initiatives to transform the company from product oriented to software oriented to services oriented is also going on in the background, and that is going to take some time to show full results. But the company is also aware of the limitations of its strong reliance on the product side, and it is taking steps to address that. For the Q2 of fiscal year 2024, the EPS is now at $0.65 as per the gap reporting. And after this $12.8 billion revenues in the second quarter, the company is expecting further decline quarter on quarter, and the revenues for the third quarter are expected to be in the ballpark of $12.1 to 12.3 billion, with the EPS also going to shrink, and it is expected to be in the vicinity of 50 cents. For the full year, the guidance is also on the softer side. The company has already earned more than $27 billion in the first 6 months, but in the second half of this year, its revenue expectations are lower, and it is expecting to add only 24 billion US dollar for the second half, and that is going to take its total revenue in the ballpark of US dollar 52 billion. The earning per share is not going to change much. It is going to slightly decline only. We now go through its income statement. This is a consolidated statement of operations for the Cisco Systems Inc. Revenue Total revenue stand at $12.79 billion, which is 6 percentage point decline from the revenue of 13.59 just a year back for the quarter ended January 28, 2023. But the company has been able to achieve its remarkable operating margin. The gross margin is still at $8.2 billion, which is slightly lower, but that is expected, and it points to the better margin of operations this time around. The operating expenses are slightly lower, almost same to what they were a year back. And after deducting the operating expenses, we get the net income. For the income taxes, the company has provided US dollar 527 million, and as a result of that, we get this net income after taxes of US dollar 2.6 billion. This is a quite good profitability, quite impressive number. The only concern which we are talking about here in this session is that the revenue is not really growing fast enough, and it is not declining sharply either. There is a slight variation, and I think it can be explained as a quarter on quarter variation. Sometimes the quarterly revenue is slightly higher, sometimes the quarterly revenue is slightly lower. Same logic applies to the quarterly net profit as well. So this slight decline in the net income is not of much significance, and it can be explained away by the quarterly variation. That simply means that the revenue and the net income, that is the top line as well as the bottom line, is not really changing much. The things are looking increasingly stagnant for the Cisco Systems Incorporated, and that is where the crux of the matter lie, because its share price is also behaving similarly. It is not really going anywhere, and it has been consolidating for last couple of months, couple of quarters, or even you can say couple of years if you expand your time horizon large enough. So in this kind of environment, we have to see if there are emerging opportunities for us to trade and split, trade and invest. Of course, you can find the opportunities in any given environment. So our job is to look for that, and prior to the shifting of gaze on the technical side, we also have to see how it has been utilizing its cash. This is the consolidated statement of cash flow. There has been cash generated by operating activity of $3.1 billion, which is markedly lower in comparison to the cash from operations a year back when it stood at $8.7 billion. The income taxes paid this time around are more than $4.6 billion. So this is the single biggest factor for the lower cash flow from the operating activity. For the cash provided by the investing activity, we have these 3.1 billion worth of inflow, and that is aided by these proceeds from the maturities of investment, which are significantly higher than what it were a year back. And also this time around, the investment of newer securities are lower, and that has meant less cash outflow than what it was a year back. So these two factors have contributed to this cash inflow of usual 3.1 billion in comparison to the cash outflow of 1.3 billion a year back. Cash flows from the financing activity. The net cash used in the financing activity is at $2.7 billion. So this time also the cash outflow is less than what it was a year back. So this is also a positive takeaway from this cash flow. So even if the revenues are not growing, even if the business is not growing that fast, the thing which the company seems to doing is better manage its operation, better manage its cash flows, and that is showing up in this cash flow statement where there has been increase of US dollar 3.5 billion from the start of the period to the end of the period. So we have now cash and cash equivalents at $15.2 billion, which is quite impressive cash hold to have at hand for any exigency as well as for any investment decision. Now we turn our gaze to the technical side of the story to see if there are emerging opportunities for trading purpose. And this is the technical chart with each candle break defined at hourly. For the last couple of months, the things have been really stagnant, and that is not likely to change much in the near term as well. Even if you look at this chart, you will see that the stock price has been more or less directionless. It has been hovering in this narrow price band of around 5 percentage point, and it is not really showing any signs of clear-cut bullishness or bearishness, and that makes it challenging for us to go for a clear-cut call on the possibilities. I feel if the stock price of the Cisco Inc. doesn't really drop below 48 in coming days, then we will have strong possibility of it eventually going back again towards 50. It has spent considerable amount of time in consolidating closer to this 50 range, and now with this possibility of further rise on horizon, I think the only thing which we need to watch out for is going to be its lowest low of recent time. As long as it is holding above that, we can be fairly confident of the continuation of this slightly bullishly biased consolidation. It is not rallying in a bullish manner, but it is consolidating with the tilt being slightly on the bullish side, and that gets the possibility of further rise towards 50 to 51 as a high probability event. The odds seems to be in the favor of this possibility. Now, if we expand the time horizon and make each candlestick to be of daily candle breadth, then we have these bearish decline and the bearish price formation of lower lows and lower highs after having reached this peak of 58 in the second half of 2023. The Cisco stock seems to be have gone into this consolidation phase with bearish tendency, and that is something which we will have to keep in mind. So here also in this ongoing decline, it has spent considerable amount of time hovering close to this prior swing low, which was its recent swing low, and after its sharp decline, this price formation had become very important, and we have already seen that the price resumed and rallied close to this prior swing low, but after finding support, sorry, this prior support having turned into resistance, there has been restart of declining, and that means we have the strong possibility of Cisco Inc. further declining towards this prior swing low. So keeping that in mind, I feel we will have to keep an eye on the price formation closer to these prior swing high, and if we get a confirmation of lower low and lower high, we will be in a better position to go for a short sell trade. But then if we change the time frame to make it long term, then further complications arise here. There is no clear cut price trajectory provided by this time frame, and as a result of that, we will have to trade cautiously. The slight bias is there on the bullish side, but it is only slightly bullish. It is not really strongly bullish, so that makes it challenging for us to expect a strong rally on the upside. But if we consider its recent price formation, then we do get a price range using prior swing low and swing high, and that makes it quite feasible that as long as prior swing low holds, we can be fairly confident of the continuation of the consolidation with bullish bias, and in course of time after having reached its price level close to the immediate swing low, we can then expect a further rally toward this prior swing high, but due after due consolidation and not straight away. So more or less, the things are looking more and more confused for the Cisco Inc.'s charting formation. There is not much of an clarity on either timelines. The short term is pointing to a different direction. The medium term is placed in a totally different way. And then here we have the longer term trajectory, which is inverse of medium term trajectory. So we will have to make our mind on which time frame to trade, and then as and when things seem favorable enough with good risk reward ratio, we can indeed go for a trade in the Cisco Systems Incorporated. So that's all from my side for today's session, where we considered the price formation of the Cisco, and after having seen its quarterly report and its price formation, I feel that we will have to trade cautiously and take our investment decisions in a prudent way, as there is not much of a clarity on the revenue front for the Cisco, and till there is further clarity on the earnings side, we will have to be cautious and go with the trades only when the risk reward ratio is favorable. So that's all from my side for today's session, where we considered these technical and the fundamental aspects of the Cisco Systems Incorporated stock price and its last quarter's earnings. Now it's time for me to sign off for the day. If you have found the session informative and useful for your trading decisions, do like and subscribe to the channel. You will be able to access quite a wide variety of sessions and equally informative sessions being hosted by different hosts every day. So do subscribe and Also, you can comment if you have found any point worth discussing. Now, that's all for the day from my side.